Hey guys, welcome back to the channel. And it was a bit of a mixed day out there. We did have some defensive sectors have a bit of a pop with utilities and REITs, but healthcare came off a bit, and so did financials. Other sectors, consumer, communications, tech, was a little mixed, mostly a little bit of green there. Economic data out today. We had ADP employment change come in more than 20% better than expected, showing that's just a kind of a smaller sample of 24 million private employment roles, and it was expected to come at 200,000. It grew by 242,000, so still shows we've got a really tight jobs market. We do have jobless claims coming out tomorrow, which would be a big one. They're expected at 195,000, so if that comes in less than expected, that'll continue to put upward pressure on the dollar and rates. And then we've got non-farm payrolls on Friday too, so that'll be a big one on top of CPI coming out on Tuesday. So the Fed's going to be looking at that. Fear and greed just ticked down a little bit to 46. Options market did have quite a big options day in Tesla, 2.3 million contracts. That was off 3%. I'll get into that in a bit later. Nvidia did well, up 3.8% on 800,000 contracts almost. So did AMD. Other than that, not too many big moves in the big mega cap names. And we still have insiders selling at record levels up here. Dark pool index did bounce a little, and Fed fund futures probability of a 50 basis point hike has increased again today. Yesterday, we did that big flip from 28 to 71. Today, we're at 78% chance. So the market's saying there's almost an 80% chance we're going to get an 50 basis point hike on March 22. Here's an interesting graphic I thought I'd show you today. I know it's a little blurry, but basically this blue line here is showing credit card debt, and that's currently at a bit above 920 billion, coming up to $1 trillion, all-time high, and this thing's gone vertical since 21. And personal savings rate, all-time low, down at 3%. So it's just hard to see how, in an increasing rate environment as well, the consumer kind of becoming a bit tapped out here in credit card debt, and then their savings being depleted. So the consumer is going to be really fragile should anything go wrong. This is easy to break. And with interest rates going up, this credit card debt is going to become harder to service, and that should affect retail spending as well. So liquidity in the consumer is drying up. And there's an article out today saying no exit ramp for Fed's Powell until he creates a recession. An economist says, I thought it was an interesting point that I agree with as well. And he basically suggests that the Fed can't estimate its rate ceiling until the economy enters a recession, which is true. No one knows, not even Jay Powell knows when this inflation is going to stop. It's looking like it's a bit more stickier than we thought, probably the furthest thing from being transitory like he tried to convince us at the start. So, you look back at the Fed's record in history, they have a pretty good record of getting it wrong, even though they employ, 500 economists, data scientists, and all this. It's amazing how wrong they can get it. And not even on top of that, they kept interest rates and QE alive way too long after the GFC. Maybe for a few years they should have, but for over a decade, they created this artificial environment. So this doesn't just, correct itself in a few months or so. Like this thing could go on for years and years, inflation and rates and all that. So that is definitely a headwind for stocks going forward. And I agree with what he says here. They have no idea where the top rate is because they have no idea where inflation settles down without a recession. So once we do get the recession and consumers in trouble, then they'll pause and possibly pivot. Until then, inflation and rates are on the rise. Okay, so let's go into the charts today. Looking at the 15-minute chart of SP 500, we finished back below 4,000. We kind of just opened flat, drifted a little higher, then come lunch, we sold off, found a bottom at 130, and then actually had a nice little bump up towards the end of the day. Came in today 100% net short. Stayed at the end. I'll let you know how I'm positioned going forward after today's move. The small little doji, we just kind of hold on here. Dow's the only index to actually finish down and put in a bit of a holding pattern as well. Internationals were up except for China. Volatility up the front 9-day. We did reach 22 today and broke through this trend line that we've been watching. And VIX still on a 19 handle, but you can see the volatility term structure is starting to move into a bit of a backwardation, just slightly. We've got front volatility higher than 30-day and 3-month, but still lower than 6-month, which is usually a sign when the market is going to go into a bit of a sell-off. Normally the market's in contango with further dated volatility, normally priced a bit higher than up the front. So that's still holding there in a little bit of backwardation. Did have a few more puts being bought today, but not too much. And just looking at breadth, we got breadth just come in, and that popped a little bit on the 20-day, about 25% of stocks above their 20-day average. And spreads, once again, have held up. We're looking at cyclical sectors versus defensive, still holding the top of their range, but looks to be putting in potentially a topping pattern here. High beta versus low volatility, just pulling back there. And growth versus value as well. And yield curve has held low, but it's still come off so hard. We're now at 1% difference between the 10-year and the 2-year. So record inversion since 1981. High yield versus treasuries came off today. Did have the 2-year get up to 5.08 as well in the session and still climbing. Fed fund futures climbed again as well on big volume. Really strong price action again. September now at 5.67. So rates continuing to march. The Fed, Jay Powell basically said he hasn't made a decision yet on rates. So they're going to be continuing to look at, jobless claims, non-farm payrolls coming in, CPI on Tuesday. Then the Wednesday after CPI, they'll be making the decision on the 22nd. So if jobs and CPI, come in higher than expected, I think for sure they're going to. I think the Fed fund futures market's kind of sniffing it out pretty good. I think for sure they'll do a 50 basis point hike, which is picking back up from the 25 basis points. So a little bit of egg on their face, but Jay Powell's not going to come out yesterday in front of Congress and say inflation rates are going to be higher than previously anticipated, and then start going back to 25 and pausing. He's setting himself up for a 50 basis point hike there, which could easily be justified because that's all he has to do. He has to justify his decisions to the public, so it can be justified what he's doing. And with this stock market continuing to hold up, jobs market tight, he has every reason to go harder on inflation. Might as well front load it and get ahead of it, because if the economy goes soft while there's still inflation, that's going to be a really tough spot for him to be in. So I do think that there will be a 50 basis point hike, barring any really unforeseen surprise in CPI and jobs. Moving forward, had high yield sell off again today, moving down to the low of its range, now below this trend line and trending down. Dollar held firm, the top of its range, having a little pause here. Bitcoin has came off a little bit. Commodities came off a little bit, and overall pretty mixed out there in stock sectors today. Did have a bit of a jump in the REITs and utilities, but we also had some sectors fall off like biotech and energy, oil and gas. Semis was the winner today, actually popped up. So did bots, sitting up there above its 50 bar as well. But we've got discretionary trading weak, and same with retail trading weak while under its 50 bar. Going on to BlackRock, sitting there flat. It's kind of not much going on out there today. It's kind of market's kind of really stuck in this kind of neutral middle zone. Apple, Google, semis were the only really thing that did anything. Tesla, you've been watching my channel, I've been calling for a pullback since up here above this trend line. Thought we're going to snap and tag the 50 bar. We did today. We're now below it. I still think we could pull back into the golden pocket from this retracement from the earnings to the most recent high on 16th Feb and get down into 170s. And if the market really turns down, I suspect this earnings gap will be at least tested and who knows, maybe over the next few weeks we get a gap fill down here. Meme stocks today, Silvergate. News just broke after close, actually. They plan to wind down their operation in the bank. So this thing's cooked completely. If you remember me saying, not only have I been saying stay away from meme stocks this whole time, when we had this huge drop down here, I told you it was structurally broken. Even from a technical point of view, when you see these huge drops, it's kind of like a fatal blow. The confidence in everyone, insiders, management, staff, customers, the market, analysts, commentators, everyone just kind of, it's too hard of a blow to usually come back from. Best case scenario, they usually just hang around with these fake pops for a year or two. Now we're down 35% after market to 317. So this thing's could trade down on a two handle tomorrow, and will eventually be wound up. So what a complete disaster they were. A regional bank getting into the crypto deposits, and once again we just see the crypto industry take out more deposits, more shareholders, and just has a great record of destroying capital. Moving on, Coinbase down after hours as you expect. Not much else going on in the meme stocks out there. We did have Big Bear AI come off 15% today, and you can see that actually peaked on 6th Feb over a month ago. And C3 AI down 5%. I think this stock's full of hot air as well, basically because it loses 60 million or so a quarter. Actually managed to lose as much as they make in sales, which is a pretty phenomenal trait to have. Moving on, Robinhood, up a little bit, Snap down a little bit. And okay, so that's the market today. Not much really to talk about, not much interesting. So this will be a pretty quick one because the market's pretty flat and we're just kind of stuck in this middle zone here. Didn't do much. The market just trading real thick. You can see on our range strength, we're at 12 here. Did dip down, but then just got bought. Little pop into the close. Really narrow range. But I'm still bearish on this market with rates, and I think the risks are to the downside, and with the fragile consumer that is ready to break. I'm still overall bearish here, especially since all indices were under the 50-bar VWAP. I came in today 100% net short and just added some defensive longs in food and utilities just to get the portfolio 80% net short. So I'm still short cyclical, high beta, and long a little bit of defensive, and overall tilted short. So that's how I'm positioned going forward. I hope you did well today, and we've got data coming out tomorrow, so we might get a bit of a move off that, and CPI on Tuesday, which I think will be a big one. So thanks for tuning in, and I hope to see you again tomorrow. Cheers.